Hey y'all, this is Sherelle Martin with Nitram Financial Solutions, where we teach bookkeeping without boundaries. So today I want to talk about a profitability plan. And I am excited because that is one of my favorite things to do. So what is a profitability plan? A profitability plan is something that I came up with, that I actually merged together a budget and a cash flow projection. And here's why. Our process for creating a budget is basically the same as creating a cash flow projection, with few exceptions that happen on the cash flow projection side. But the cash flow projection starts with a budget. Now we have an opt-in that you can download a cash flow projection forecast. That's more from a simplified version to allow people who are trying to DIY their way to creating a cash flow projection. But the one that we create and provide as part of our services has way more steps to it, way more complexities. And so what I want to share with you is the steps on how we create that so that you can potentially duplicate it yourself. And if you want to find out more, or you actually want to work through creating one, we have a workshop coming up on how to do that. Just comment cash flow at the bottom of this video and we will get you the information, the link to actually sign up and register for that course. So first, what is a budget? A budget is a plan. That's it. It's not magic. It's just a plan. And a lot of people are scared of budgeting because they're like, oh, I don't know how to budget because I don't know what's going to really happen. And that's okay. You're not supposed to know. You should have kind of a general idea. A business owner will know kind of in the ballpark of what they expect to do and what they plan to do. It's not supposed to be exact. That's what the financial statements are for. Those are exact. Those will reflect what actually happened. A budget is a guess. It is a plan, is our best guesstimate on how we want things to play out. So what's the first step? The first step is that we're going to look at the expenses and we're going to create a budget for those expenses. And so in the 12 months that we're doing, let's say we're doing January through December of 2025, because that's what year this is, you're going to actually plan out the expenses for the entire year for every single account. Every single account. Don't skip a thing. If it is truly zero, then yes, it is zero, but don't skip any accounts. Budget everything. The key to this step is that we usually take an approach where we're doing averages, but there are a lot of expenses that are known. So the key to this step is that when you know exactly something that's going to happen and the month that it's going to happen in, you need to put it in that month. Don't try to spread it. Don't try to do anything. This is just putting in the expenses that we expect to pay. So the thing that I want you to remember is that, remember I said, budgeting is a plan. That's all it is. It's just a plan. It is not meant to be ironclad. It is not meant to be unchangeable. It is a plan based off our best guess estimate of how we expect things to happen. So you're going to plan out all the expenses for the entire year, including everything: people, office expenses, advertising costs, insurance, rent, everything. You're going to plan it out for the entire year. So now that we have all the expenses laid out, the second step is to actually do the same thing, but for the revenue. And why do I do the expenses first? Because if you do revenue first, then you're going to do expenses second, and then you're going to end up with losses and negatives, and that's not a good plan. So I do expenses first so that you can see right away the negative effects of the income being too low. I do this also to ensure that every month is profitable. So the key to a good profitability plan is that every month is profitable as well. Now, there's a little asterisk caveat there for certain businesses who are, particularly the businesses who are seasonal. You may have, those types of businesses may have months where there are losses because they're seasonals and they're not going to have any revenue coming in, right? A business that's located at the beach isn't going to have expenses in the wintertime because the beach is closed at the wintertime. They're not going to have any income, but they will have expenses. They may have expenses to help make sure that things are ready and available for them when the doors do open for the season. So in that instance, yes, there may be some months with losses, but on an average, most businesses, especially service-based businesses, should never really have a loss in any given month. We're not planning for losses, we're planning for profit. In the event that there is like a major campaign or a major hiring spree where we're going to kind of ramp up some expenses before something drops to be able to bring in the revenue, then we can make adjustments for that. I'm okay with that. But to actively plan out that you're going to spend all this money and not have a single month be profitable means the end of the year will also be a loss. And that's not the point of the whole thing, right? So the point is that at the end, we are going to be profitable. And so, which is why I call it a profitability plan. So we're going to map out the expenses. We're going to map out the income. And then the third step is to adjust as needed. So what that means is, let's say we know we paid for an expense in the previous year that we're not going to have this year. Well, we're not going to plan for that expense, so we don't include that expense in the books. Let's say we know that we have a high probability of signing on a new contract in a certain month that's going to bring in X amount of dollars in revenue. We're like 99.99% sure that's going to happen. We put that in the months that we expect those revenues to come, so that those are reflected as part of the budget too, because then you're going to probably have to adjust some expenses to support what services go into generating that income, right? So we're going to make the adjustments as we see fit. And then the fourth step is to review it every single month. Every single month after the books are closed, we drop in the numbers from the actuals, because our profitability plan includes actuals and the planned forecast out. So we're going to drop in the actuals, and then we're going to compare, we're going to reassess, reevaluate based off of conversations we have with the business owner to ensure that the plan is still intact and still achievable. And based off of whatever is happening and things are going on, we will make adjustments accordingly. So that's how you do a profitability plan. Again, my favorite thing to do. If you find this information helpful, please like, follow, and subscribe. Also, please share it with your network of people who you feel would find this information valuable. And if you would like to find out more or want to learn exactly how to create a profitability plan, then please comment profitability plan down below, and we will send you a link to sign up for our upcoming course. Hope you guys have a good day. See you next week.